guys, it's Ian Coleman and this is your weekly market wrap. It is Friday the 28th of February 2025. It's just gone 2:30 in the afternoon in the UK. I for one am exhausted. It's been a busy week, a volatile week. I was expecting price action to be a bit muted this week with a lack of high tier data releases. That's not been the case. We've seen a dramatic move to the downside in Bitcoin. Gold has come off the top, broken ending wedge formation to the downside, and seen quite a decent sell-off in that commodity. And we've also seen a move to the downside in US stock indices. What we're going to do in this video, we're just going to review the data releases for last week quickly, because there wasn't really that much to talk about. Most data or economic data releases came in around about in line, but next week we've got a packed calendar. If I thought I was tired today, I think it's going to be even worse next Friday. We've got data releases all the way through from Monday to Friday, finishing off with non-farm payroll, and we've also got Trump's tariffs coming into play on Tuesday, unless he changes his mind. Then we're going to look at the charts. So we're going to be looking at the dollar index. We'll look at dollar related products. I've got an emphasis on sterling dollar and dollar yen, one to the upside, one to the downside. We're going to look at gold. Has that got scope for continuation? And we're also going to look at Bitcoin. We can't leave that one alone this week. So quite a lot to get through. So let's get to the screens. And this is basically the data release for this week. So you can see on Monday, no real sort of red tier data. Again, Trump coming in as high or market moving. Nobody knows what he's going to say next, and everybody's on tenterhooks waiting to see what his next decision is. Tuesday, again, no sort of high tier data releases, so nothing too much to worry about. The Aussie Consumer Price Index data came in just below expectations, so again, nothing really moving markets there. The Swiss data was in line at 0.2%. The GDP data yesterday was bang in line at 2.3%, and obviously Trump's speech again last night, and then today we've had the PCE data, which again has come in line at 2.6%. So we're always anticipating sort of decent market moves, and we're always breaking down charts and chart formations and system analysis to try and get in front of these data releases. And sometimes you can have a bias before you go into higher tier data releases. Obviously PCE today is the Fed's favourite gauge of inflation, so if you get any fluctuations outside of the anticipated range, you can get decent moves, and I was expecting the dollar index to move to the upside, but unfortunately we didn't see that, and we have got a pretty muted session, I think just because traders are exhausted going into the weekend. So a quick look at next week. Okay, so Monday we go straight into harmonized consumer price index data from the Eurozone. We've also got the ISM, the US ISM manufacturing figures. We've got quite a decent setup if it plays out in euro dollar, so we'll look at that in a minute. Obviously Monday would be the day to potentially catch that trade, with both data releases potentially affecting that major currency pair. RBA meeting minutes coming out on Tuesday. I haven't really got much of a bias on the Australian dollar at the moment after such a dramatic sell-off. We would need to see a move higher in risk appetite to see a correction in the Aussie. Euro Aussie I think is quite interesting. It's moved higher really aggressively and is quite close to a previous swing low. It would have to, swing high. It would have to hold on to that level. In fact, I'll make a note to look at that in this video. You'd have to hold on to that level to then move to the downside in the CD leg of what's known as the cipher pattern. So maybe one to look at for Tuesday. Wednesday, GDP, I won't be about. I'll be in bed at that point. We've got some Swiss data, consumer price index. I think the focus on Swiss at the moment is really as a risk or safe haven product. So that's going to have to come out of line quite dramatically, I think, for traders to take much of a notice. And then Wednesday, ADP and ISM PMI. So again, market moving data. ECB on Thursday. So obviously the focus back on the euro and euro cross currencies. Euro sterling's interesting at the moment. If it holds on to a 2-month swing low, then we could see an aggressive move to the upside in that cross. We've got the press conference obviously afterwards, and then Friday we have what everybody waits for. We've got the non-farm payroll, which is the US data releases coming out at 1:30 UK time. So like I said, get as much rest as possible over the weekend. It's going to be a busy week next week with all of these data releases. Let's get to the charts. Like I said, what I want to do is just start with the dollar index. I then want to move through different correlated products, and if we've got time, look at Euro Aussie and Euro Sterling towards the end of the video. So DXY dollar index. This is the chart that I'm interested in. Let's make that a higher time frame. Okay, so I apologise if it's looking complex, but trading is complex. We need to forecast support and resistance levels. I then use cipher pattern analysis, which is around fib levels, confluence areas, to try and decipher where single currencies and cross currencies are going. What I have a tendency to do is look at single currency baskets, look for a strong currency against a weak currency. Sometimes currency moves are just dominated by one currency. So at the moment, most of the moves that we are seeing, or we did see last week, was the Australian dollar, New Zealand dollar, and the DXY, which is the dollar index. Next week, I think it's just going to be dominated basically by the dollar index. So here we have the 4-hour chart. This is a bespoke resistance level. So these are levels from a system that I formulated myself. It highlights support and resistance. What I then like to do is to look for correlation, things that are coming together at one point. That then gives me an emphasis to either sell or buy that single currency or that cross currency around about that level. So the dollar index, we've been moving higher. Okay, the dollar index is a safe haven. The US dollar is a safe haven. When we see stock indices move to the downside, what has a tendency to happen is that the dollar index will move higher. That's what we've seen. Okay, this is a combination of Elliott wave analysis and cipher pattern formations. What I like to see is a combination of both. So here we've got a wave 1, a wave 2, wave 3, wave 4, and then up in the 5th wave as far as the Elliott wave is concerned. Now what will normally happen in the Elliott wave theory is after a 5-wave sequence we will then see a corrective move to the downside, normally in 3 waves. Okay, and that is held inside of this cipher pattern. So this is a cipher pattern. This is the XA, or the starting leg. AB, which is an impulsive leg. BC, which is a corrective leg, lines up with the Elliott wave, and then the next impulsive leg to the upside. So although the immediate bias is mildly bullish, I'm looking for rallies to be sold into, and there's a real emphasis in my analysis with regards to risk reward. a lot of traders will ask me, well, what would you do now? Well, the issue being with trading at this point is that I haven't really got value. In other words, if I take a long trade here, my target's there, my stop loss is here, so I'm going to get less than 1-to-1 risk reward. I'm looking for 2-to-1, 3-to-1, 4-to-1 risk reward. So I'm quite happy as a swing trader to actually wait for setups to appear. So I want to sell into rallies. I then want to play this BC leg to the downside over next week. So thinking about that, we'll overlay that analysis or that bias onto the dollar products. And what I do here on my trading view charts, I have different watch lists. So I'll have all the dollar products in one watch list, all the Swiss products in another, yen products in another, etc, 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 just so that I can, if I'm looking at a single currency, I can just jump over to the ones that I consider valid. So euro dollar, euro against the US dollar. Okay, let's go to this time frame first. Let's move that out of the way, which is a daily time frame. Okay, we've seen the strong decline. Sometimes when we get strong declines, we get impulsive reactions. Okay, we've got a 1.0333, not easy to say, pivot here. Okay, we've got trendline support at 102.68. This is an ascending triangle pattern. It's making higher, even though it's using 105.33 as resistance, it's continuing to make higher lows, and eventually it has a bias to break to the upside. Okay, so what this time frame is basically saying to us is that we should be buying dips in euro dollar. If we look at this time frame, I'm just going to break it down a bit. Okay, it looks like a 5-wave move. So wave 1, wave 2, wave 3, wave 4, wave 5. The reason I've put this indicator on there is that I like to work out my risk reward factors before I go into any trade setups. Not my favoured play for the dollar. My favourite play for the dollar is either going to be sterling dollar or dollar yen. So sterling dollar is very similar setup with regards to sort of higher time frames, but what we are seeing here is wave 1, wave 2, wave 3, wave 4, down in 5. I've got support at 125.50. The reason that I've got that line on there is I also use some time frame analysis, and I like to time when my trades are going to be initiated, and it's basically telling me that if this is going to break higher, then the trade should be initiated around about in the morning session or the Asian session, okay, between 4 and 8 o'clock AM. So that's my prime time to get long of sterling against the US dollar. Dollar yen, I thought that was not going to show what I was looking at. So again, a combination of Elliott wave theory, but also cipher pattern analysis. We've moved higher in 1, 2, 3, correcting down in 4, and then up in 5. Cipher pattern formation located at 151.93. Again, I think this will probably trigger, if it's going to trigger, early in the Asian session on Sunday night, Monday morning, with regards to my time frame. Just looking at the clock, so we'll get on to Bitcoin and gold. So Bitcoin, what a sell-off. I'm going to go straight into this time frame. I know the mantra in Bitcoin is, you know, buy the dip, it's always going to go up, etc, etc, etc. I don't think that's going to be the case for quite some time. We've got a double top formation that was confirmed on a move through this swing low here, which was 89,028. We've seen a decent move to the downside. A warning sign here: if this plays out, when Elliott wave flips, it goes from 5 waves up to 5 waves down. Okay, and then the medium term bias then becomes bearish. So we see 5 waves up. If this plays out, it's going to be 5 waves down. We've got a 261.8% extension level located around about 62,100. It's a trend line support or a reverse trend line support. So what happened here? We used this level as resistance. It then acts as support, and then it acts as support again. So what this says at the moment is that we're correcting higher within a fourth wave. Should be limited. If it breaks this swing low here at 91,178, this formation is blown, okay, but the immediate bias is to the downside. Prime resistance is probably up here, which is that 89,028 pivot. At the moment, the bias is to the downside. Gold, and let's just go up to a, we're already at a high time frame. I was going to say let's go up to a high time frame. This formed a crab pattern. The actual exact level for the completion of the formation was 2,960, and we made a 2,956 swing high. So near enough. We've seen quite an aggressive move to the downside. It gets a little bit more complex when we're moving down through time frames. Again, those thinking that the mantra is to buy the dip, it's a safe haven, what can go wrong? We could be seeing a turnaround in sentiment here. We've seen 5 waves up. If we see 5 waves down, as this time frame would dictate, then that is a trend change as far as medium-term analysis is concerned. Ending wedge breakout made the measured move target of 2,876 pretty quick. We're now hovering around the 161.8% extension level. That is normally where we will see a fourth wave correction. What was support becomes resistance at 2,876. The 261.8% extension level, and what is often a common target for an Elliott wave formation, is located all the way down at 2,776. I'm just going to show you one more asset, and that's because to me it looks like a medium-term swing opportunity. I'm not really a fundamental trader, but obviously I listen to the news and I realise that news drives the market. Tariffs on Germany, tariffs on the automobile section could be really bad for Germany. We've also had the election where we've seen a coalition party, so it's not looking particularly rosy, I don't think, for Germany. And let's just have a look at this chart. So this is a topping pattern known as a bat formation. Okay, so we completed that at 22,832. We're now moving to the downside. So a couple of things to take away from this chart here, this 2-hour chart. An ending wedge, that's often seen at the end of a fifth wave as far as Elliott wave is concerned. Then this topping pattern. Sometimes we get a topping pattern, sometimes we get a head and shoulders formation. We've seen a topping formation. And if we go to this time frame, which is the last one we're going to look at, okay, we can clearly see 5 waves up, 1, 2, 3, 4, 5. And that would dictate that we've got the potential to be topping out in the DAX. I hope you found this weekly wrap-up informative. I hope there's some takeaways that you can use going into next week. Might be wise to watch the news over the weekend. You never know what this man's going to say. And all the very best with your trading for next week. I'll be back again soon.